out there. Rough house.
Good afternoon, everybody. If you haven't signed in or signed the COVID waiver, please do so at the back. Today we have a panel of presenters for you, and our first presenter is Andrea Pelletier. Is it right? Yes. She is a client advisor and agency partner at Gulf Shore Insurance, having joined the team in 1990. Her experience and expertise in the private risk services division enables her to offer a consultative approach in working with successful individuals and their families. Andrea is proficient in understanding her clients' insurance needs, creating and customizing package insurance policy solutions in the areas of luxury homes, car collections, jewelry, fine arts, watercraft, and personal excess liability. She holds the Chartered Private Risk and Insurance Advisor and the Certified Professional Service Agent designations. She's an active member of the Naples Area Board of Realtors and Women's Council of Realtors. Thank you very much.
Thank you.
Yay!
Thank you. Thank you. So, I appreciate it. So good to see everyone. And as it said in my little bio, I've been in the agency for over 30 years, and I specialize in personal insurance. One of the we focus on putting packages together because we're able to put together better terms, with the homeowner insurance piece being the core element. And so, we've written a lot of business in the area over the course of the last 50 years or so. And I'm in the Naples office. But flood insurance has been top of mind for a lot of folks, including realtors. I've had so many realtors reach out to me in the last week asking about all of these flood changes. So we're going to get right into it. We kind of have had a lot of ground to cover. This is the agenda. I'm going to start with going into FEMA risk rating 2.0. I'm going to talk about managing rates. I'm going to talk about the different flood markets. And
I have them up. I have them up, so I think if you log in.
No, I'm not going to log in. That's
Okay.
why I wanted to test with you. So cool.
So she just, oh, what happened? What'd she do?
okay, so if you're virtual, I think you want to do a mute. You want to make sure that you're muted, please.
Can you hear me?
Oh, can you hear me?
Yep.
Yay!
Thank you. All right, and then we're going to talk about flood claims as it relates to, how the flood policy pays and how much coverage is necessary. So we're not going to get into too many claims examples. But flood insurance, that's what we're up here to talk about. So FEMA's risk rating 2.0, and they call it specifically equity in action. Provides action. I'm going to just read this because provides actuarially sound rates that are equitable and distribute premiums across all policyholders based on the value of their home and unique risk, flood risk. So these are the new rate factors that when we're going into quote a flood policy, they're looking very much so at distance to ocean, coast, ocean, river, and not so much the flood zone as they are this distance factor. So as you can imagine, Marco Island is, most properties are pretty close to the water. Flood type, they differentiate river overflow, rainwater flooding, storm surge, and coastal erosion, ground elevation, first floor height, number of stories, and that is important for condo unit owners because on a condo unit owner policy, they're using the floor in which the unit is located on to rate that policy. The other kind of more minimal characteristic here regarding the height is that they actually ask how many steps you have to take to get to the first floor, and they also rate the policy based on where the machinery and equipment is located, if it's a full floor up or if the machinery and equipment is in the basement or something. The construction type, this is new, the dwelling value and cost to rebuild. So higher valued homes are going to be receiving higher pricing. And in all of the rating examples that I ran and that we as an agency completed over the course of the last couple of weeks since these flood insurance rates were released September 1st, when we have, what's conspicuously not here is a flood elevation certificate, because that's one of the things that FEMA is touting. You no longer need a flood elevation certificate. However, what we saw was when we had a flood elevation certificate, and especially if the risk was say a +2 or a +3 elevation difference, the rate actually came in lower when we had a flood elevation certificate. So that did make a material difference. So when is this all affecting us? Well, now, for new policies 10-1, and if somebody's, got the 30-day waiting period, they're getting the new rates. For everybody, it's gonna be 4-1. So everyone who has a flood policy is gonna roll into this new rate structure effective 4-1. Now, between those two dates, 10-1 and 4-1, if you have a policy that renews between 10-1 of this year, 4-1 of 2022, you can opt to go into the new 2.0 risk rating. However, you'll see why I'm not a big fan of doing that. But yeah, so that is the timeline on when these changes are taking place. And I'll tell you that every single day I learn something new, and this is the information that we have to date. So, does anyone remember the Biggert Waters event? So okay, so it's interesting. It's an interesting thing. So very important to really work at managing rates in this whole scenario, because what we see from a rate standpoint is that most homeowners will experience a rate increase. I mean, percentage-wise, I couldn't tell you how many, but what's driving rates up for every single risk that I looked at is the coastal exposure and the higher value properties. So according to FEMA, and maybe it's inland, maybe it's non-special flood hazard areas, some inland properties will get rate decreases. I haven't seen any yet. I doubt you'll see much of that, if any, on Marco Island. And then if someone does get a rate decrease, they'll get the rate decrease entirely on the first renewal. But anybody and this is really important, and this is really sort of the crux of the whole process and how we're going to be moving forward with this, is that these higher rates are going to transition 18% rate increase annually until FEMA gets the full risk rate. Now that applies to renewals, and it can apply to new home buyers, because new home buyers can, and what I like to use the word confirm. New home buyers can confirm the seller's flood policy. So if the seller has a flood policy, and that's one of the action items you're definitely going to want to ask your sellers for the benefit of the buyer, do you have flood insurance, and get a copy of that declaration page, because the buyer can obtain that 18% cap in rate as long as the seller has flood insurance. It's kind of an unusual caveat. Again, until the full risk rate has been reached. And FEMA refers to this as the glide path. And I think that's a term we're going to be hearing a lot of, glide path. So I put some rating examples together to give you a really good hands-on idea of what we're looking at from a rate standpoint. I actually have 4 examples, but these are 3 live quotes that I did, all homes on Marco Island. This one is on Hickory Boulevard. It's a primary residence, newer construction, built in 2001. I would consider this a middle market home, replacement value at $290,000. It's today in an AE flood zone. I had an elevation certificate. It showed a +1 elevation difference. The client is currently paying $1,054.
Wait, where'd you get that 290? Where'd that come from?
That came from, I'm trying to remember on this one, because that's a good question.
It's in 2001. I don't know how you're coming up with that price.
Well, I did put the square footage up here, but it was like, I want to say maybe an 1,800 square foot home. But what's interesting about that is that not this particular rating database, which was Right Flood, didn't let me put in the value, and it pulled that itself off of, I don't know if it came from the property appraiser or some actuarial system. Do you know?
We're gonna have to probably figure that out, because we know that the property appraiser doesn't have the correct
Right.
value of the structure for the
That's the
property.
replacement value. That's not-
Right, but
Yeah, that,
right,
is
It's
that
not
the,
necessarily the tax base for real estate. value.
it's not including land. I'll tell you that, it's not including land.
is it including the accessory structure values though that are included?
Oh, I hear you.
So.
replacement value would be identical to what we have, and I will tell you this, I quoted, and I don't remember was this one or another one. I have a couple, we have lots of different rating databases that we use for flood, because there are lots of different rating companies. I ran a quote through Wright Flood, and that question came up about the replacement value. And Wright Flood puts its own value on it. So a rate was determined. Then I went into American Bankers, I quoted the exact same risk, and I put in a higher dwelling coverage limit, and frankly, the rate was exactly the same. So I think it's within a certain range where the value changes. Yes, sir?
And that's also takes into account depreciation. So that's not the replacement value new, that's the replacement value depreciated by 20
Replacement
years.
value is not, replacement value is not depreciated. It's actual, replacement value is what it would cost today to rebuild as new. So this was really just a rating example. I wouldn't put too much emphasis on that at the present moment. And honestly, I'd also insured this home, and I couldn't remember off the top of my head how much coverage we have on the home. We may have had more, but again, Wright Flood is pulling that number from some internal system. When I rated this policy for a new home buyer that was able to confirm that the seller has flood insurance, which they do, so the glide path could be assumed by the new home buyer, the rate came in at $1,302 for the same coverage. So you see, it's not that much more, $250, about $250 more. However, when I rated that same risk with FEMA 2.0, with saying that there was no prior flood insurance, that same exact policy came in at $7,298. So the point is that you've got that 18% capped every year until they reach the $7,298. I mean, that is where the rates are headed. In every single one of these examples, I also went out to private flood. I researched options to private flood. I checked three flood carriers on this one, including Neptune, and it was not eligible for any of the private flood markets that I looked at. So yeah.
For $7,300, we used to only get $250,000.
That's exactly
that. Still,
Yeah, that's the
but I
same.
have to have one for mortgage. So
Right.
you're gonna outpace, the government is now outpacing the cost of home ownership, and that's what we're doing.
It's a concern. It's definitely a concern for a lot of people. So I think we're really just in a discovery period as far as, we didn't know what the rates looked like until 9/1, and I don't think the carriers knew either. Some of the literature that I saw that was published had rates capped at like $120 to $240 a year. But that I don't think I think that may have been a national average. Florida's going to be hit much harder than that. I don't know. This is just the information we have today. So let's look at a couple more. Let's see. This one on Rose Court, also a primary residence, is a little bit older, built in 1973. This one I am insuring for $685,000 replacement value. Also in an AE flood zone, and there was no flood elevation certificate, or the first floor is below. So we have it rated as a pre-firm, and the client is currently paying $3,085. When I rated this on a new policy where the new home buyer was able to confirm the seller had flood insurance and access that 18% rate cap, also referred to as the glide path, the new homeowner's flood policy was $3,929. So I think for today, as long as the seller has a flood policy and your clients are going to have access to a rate like this, it's not going to be a detrimental thing. But I do think as this 18% continues to build over time, and the client gets to the full rate of $10,246, or if the seller has no prior insurance, and that person is looking at some higher pricing, it could be, it's definitely going to be a factor. In this case, when I shopped private flood, I was able to get an offer through Neptune Flood for similar coverage. It's actually a little bit broader for $5,570. So this client it would be beneficial for this client to, at some point in the life of the policy, to transition to private flood now. And I'll get into private flood in a little more detail. private flood is written through Neptune. I mean, it's really like a Lloyd's of London contract. Their excess surplus lines, the program's capacity of pricing has a tendency to fluctuate. So if something were to happen to that Neptune offer and they decided they weren't going to renew in certain areas, or because of flood losses, they were, whether they were non-renewing, raising their rates, whatever the case may be, and this client decided they wanted to go back to the NFIP, which is the policy that you were referring to, the 250 on the building, 100,000 contents, it's the standard NFIP policy. They know there's no glide path to assume. They go back to the NFIP with the full risk rate. There are still some solutions to managing rates on that. Is that a little bit better example? I know we were kind of caught up on the replacement value on the last one, and this next one too. I know this next one is undervalued, but this is what Right Flood pulled, because I'm insuring this home for like 7 million on Caxamas, built in 2004, secondary residence. This one is in a VE flood zone, +1 elevation difference. The client is currently paying $1,020. We were able to grandfather in the AE flood zone because that zone had changed somewhere along the line. So for a new home buyer, the seller discloses, yes, I have a flood policy. Here's a copy of the declaration page, or you get the minimum amount of coverage and I'll show you, or minimum amount of information, and I'll show you what that is. Their rate is $1,203. Fantastic.
So over time,
Or
we're gonna
if
get about 10 to 12 range.
over time, or if the seller didn't have flood insurance and the new buyer, obviously in the VE's flood zone, but although it's interesting because folks in a VE flood zone, a lot of times that ground floor, the first floor is a full foot above, and you've got breakaway walls and such. That is not the case in this home. But some of those folks don't buy flood insurance, although on this particular home, I would highly recommend it because it's not elevated with the breakaway walls. But yeah, the full risk rate on this is over 11,000. Neptune flood came in at 10, so it wasn't much of a savings to go to the private flood on this, and it's because of the VE flood zone.
Are we gonna see higher than that, $13,000?
That's a really good question because FEMA says, and actually this was in some of your information, Chris, their intent is not to keep raising the rates. But, so I mean, am I hearing that they're saying it's gonna come up to this, it's gonna stay there? I don't know. I'm not feeling good about an $11,000 primary flood rate. I don't know. That's just me, but what I'm hearing is that they're not intending to continue to go beyond that full risk rate, which is absolutely, for a $7 million home, well, that's one thing, but for a $300,000 home, that's something else. So
Can't afford it.
Yeah.
Affordability's gone.
new construction. So this is not really a rate example, rather, it's just really a synopsis that on new construction, most of the time, the builder doesn't buy a flood policy for the course of construction. So that home buyer is gonna be looking at the full 2.0 risk rate. There won't be any most likely won't be a glide path to transfer. Maybe there is, maybe the seller or maybe the builder did a course in construction, but that's only gonna apply, for maybe the next year. I mean, once we're, a year from now, I doubt a builder is gonna be paying, I don't want to speculate, but, rates are gonna be high for the course of construction, rates are gonna be high for the finished construction. Private flood options will be available in this one, so I would highly recommend on new construction where there's no prior insurance to definitely explore the private flood. So you can see from the rate examples how important it is to confirm the seller's flood policy, because again, rates are capped at 18% annually until the policy has reached its full rate. So what you want to do is get a copy of the declaration page from the seller. I would highly recommend getting that and just having that documentation, because on every quote example that I ran through, it asked, does the home currently have flood insurance? When I say yes, it asks for these 4 things: the flood carrier, the policy number, the expiration date of that current term, and the original policy date. And what was interesting about that is that if the term was if that current policy was not enforced for at least one full year, there was no 18% glide path. So, it's a situation where FEMA, if we'd have known about this in advance, many folks would have said, hey, I'm gonna buy a flood policy. And then I'm gonna get, because I'm selling my home, I want it to be more attractive to buyers, and then they can assume the glide path. They would have had to decide that a year ago. So it's my understanding, the 18% is available for policies that have been enforced for at least one full year. Those were based on the rates that I obtained. Flood insurance market, so I wasn't sure the order in which to really share the information because there's really so much, and I thought you would be curious really to see what the rates were looking like, but pretty much everything that we've talked about so far, yes, sir?
I don't mean to interrupt.
No, you're fine.
A little off the subject, but it's on this information, just curiosity. I've been down here probably about 27 years, I've seen a few hurricanes come through.
Mhm.
I have a customer buying a house, the house on Rose Court,
Yeah,
and they're paying cash.
right.
And he says to me, well, I want to get homeowners insurance and I want to get wind, because I've seen damage from the wind on past hurricanes, but I don't really want to get flood insurance. What would be your opinion on that if you don't have flood
Mhm.
insurance on this island?
Right. My opinion is that flood insurance is an essential part of the property coverage. And that they should at least look at rates. And that there are ways of managing the rate. I think there are ways of managing that higher pricing, and I don't have all those rate examples, but I think there are ways of looking at flood insurance where it can potentially be a lot more affordable. I always recommend, hey, before you just decide you're gonna self-insure something, at least let me get some quotes for you so you can see what you're looking at price-wise, because the homeowner policy isn't gonna cover any kind of water intrusion from an outside source. And obviously, and it's interesting, when Kelly and I were talking about claims on Marco Island, there weren't that many historically. But I still think it is an essential piece, because these AE flood zones are 100-year flood zones. And I do think there is a potential to have a much more devastating event in the future. And I think that is what all these actuarials point to, a devastating event in the future. And I, as an agent, want to always keep that in the back of my mind, just making sure I'm making the best recommendations for my clients. This is what we recommend. If you strongly feel, nothing's going to happen and you don't want to buy it, no one's forcing you to if you don't have a mortgage. Some homeowner carriers do require that you carry flood, like Chubb insurance, if you wanted to buy your insurance through Chubb, Pure, Berkeley One, Cincinnati, they all require flood insurance. Vault insurance, I don't think requires that, and carriers like Frontline, Tower Hill, they're not going to require flood, but sometimes the homeowner carriers require it too. So, absolutely. Almost everything that we've talked about today, these flood rate increases, and of course, Neptune is a private flood market, but all these rate changes are coming down from FEMA and affect NFIP. But there are many different writing companies that access these exact same NFIP rates. They're all the same no matter which one you go to. Wright Flood, American Bankers, Hartford, they're all the same rates. Pure has a writing company, private flood and excess flood. So I get a little more detail. So here's the standard flood policy where you have the maximum available 250 in the building, 100,000 contents. I totally see what you're saying about outpacing. We were talking about a risk example where the premium was 10,000, and in 30 years, you're looking at 300,000 in premium. But something about this, and it kind of goes back to the gentleman who was asking about the Rose Court property and what do you recommend as far as flood insurance, is that if somebody has a mortgage on a home, what's required is 250,000 in building coverage, because most homes are valued over that on the island. So, but the contents, although it's available, is optional. And it's, from what I heard, it does save a lot to carve out the contents and just do the building and maybe take a higher deductible. They do offer up to $10,000 deductible. That is what I would recommend doing before somebody just decided I'm not going to buy the flood. Just look at the building coverage and maybe forego the contents. And there's a reason, there is actually a technical reason for that. This is a little more info about private flood markets. You can get higher limits on building and contents. Neptune writes up to 4 million. No surcharge, single deductible, no waiting period, replacement cost. However, the market does fluctuate. Rates fluctuate. There, you saw the one example where no one was willing to offer private flood on the home. It was the one on Hickory, I think. And then when we do have storm activity, it's going to affect capacity and pricing. And then we've got excess flood, and we actually write a lot of this particular type of business. It's the second layer flood policy over the primary flood. It's where a client can insure their home to value, because you only get the 250 in the building. Most clients do opt for this. We shop it with carriers, different Lloyd's, London's, Lloyd's, Lexington, Canopius. There are lots of different excess flood markets, so we shop it extensively every year because the rates are up and down after the various storms that we see. But this is a very popular product. Let's talk about coverage, how much coverage is the right amount, and looking at how flood claims are settled and what is covered. One of the things I will say on this is that, from a basic insurance knowledge standpoint, is that flood claims are excluded under the homeowner policy. And the flood policy pays for direct physical loss. So I just wanted to really just give you a little bit more knowledge on this, because, we're talking, you've got let's just say a $2 million home, and then the person is, do I need $2 million of flood insurance? Let's see. You've got maybe I'll say a 3-foot storm surge. So this just gives you a little bit of information about how the flood policy is going to respond. I think it's good to know this up front instead of after there's a few feet of water in the home. So you've got a few feet of water in the home, and the lower cabinets are damaged. So they literally cut the drywall where the water line is. They replace the drywall below, they replace the cabinets below, but say those cabinets don't match the upper cabinets. FEMA is not going to replace the upper cabinets because they don't match. That differs from a homeowner policy. If it was any other type of inside water where the pipe burst and homeowner were paying it, they're going to make sure the cabinets match. The flood doesn't do that. So there's that. They pay actual cash value on contents. So the flood policy pays direct physical loss. The water actually has to be touching something for them to pay. They do actual cash value, depreciation on the contents. They exclude art. So there's another reason why I think I'm not brokenhearted that, if somebody carves out the contents, there's another way of handling that. But there's also exclusions on pretty much everything outside the building: decks, docks, driveways, seawall, swimming pools, machinery and equipment in the basement, all excluded, just to name a few. Consulting with a trusted advisor to get recommendations on how much insurance is the right amount. What I always like to do is, again, I put an emphasis on the building coverage because I don't think the flood carriers cover the contents that well. I think a great solution for covering the art is to do a valuable articles, put the art on a valuable articles floater. You get full coverage, including flood. And then also to insurance to value, even, especially on the high values. When I have a client who's like, I want to make sure my property's covered, I want as much coverage, what do you recommend? I usually recommend 80% insurance to value on the structure. So that's usually what I'll do, somewhere in that range. So, because again, I like to put the emphasis on the building coverage over the contents, and then, ensuring the structure properly. But always consult with a trusted advisor, and I think it's great to get quotes with the various markets, looking at different coverage combinations to get the best pricing. So those are my final comments. Does anyone have any questions on that? I know it's a lot. Yeah,
Is this glide thing new or has it been a while?
brand new.
Just started September.
Okay, that's what I'm wondering about, okay, so really it's gonna be like on a supplement, right, on disclosures and the flood declarations page.
Yes, I think that should be a disclosure. Yeah. So I am going to, you know what, I don't have your bio. Oh, you've got one. Oh, yeah, let's see. Okay, all right. Thank you. Oh, it is?
Yeah.
Okay, so what we do. Here
I ask you one quick one?
Absolutely.
In regards to your company, we have some older homes on the island, like the phone homes that have copper wire, aluminum wiring, and floodplains a little low. Are you guys planning in any way at all to advise one of these older homes to be able to get insurance for it, for the mortgages?
Aluminum wiring has been an issue, definitely. I mean, when it comes to wiring, one of the core perils insured against under the policy is fire. So I've never seen a policy with a fire exclusion. So I know I've got one in Naples that's similar, and they're having to get an electrician to do the rewiring, because basically what it is that the electric has not been updated.
Because back in the day, we'd go with a larger 200 amp breaker box.
Okay.
And it would spread out the load on the aluminum wiring.
Okay,
But I mean, not knowing it puts you on the spot, that's no longer sufficient. The entire house would have to be rewired.
yeah, and because on the older houses, every single carrier wants a floor point. They want everything updated, and they're so picky about the risk. They're really not, even Lloyd's isn't gonna wanna write something that hasn't been updated. The only way to do it would be to do a builder's risk, and then the client has some coverage and while the work is being done. I mean, that's the only way I would be able to write something like that, probably. Yeah, you're welcome.
Hi there, Kelly Federici, City of Marco Island's floodplain coordinator. Some of you got familiar faces. I've been doing this presentation for six presentations now, 6 years. And so I just have basic stuff. She went over all of the insurance stuff. I'm so thankful for that, because it's very disheartening what FEMA is doing to our floodplain insurance. I have here, which I didn't include in the presentation because it was a last minute thing, but I did do a handout. I started doing a flood insurance assessment for the city of Marco, and so I'm just going to kind of go into the flood insurance stuff right now, and then we'll get into like doing this 50% rule in construction, since we're already on the insurance subject. So what this means is right here is just a breakdown of the policies that are on Marco. Each year, FEMA provides us with information of how many policies and who has a flood insurance policy on the island, and if there's any repetitive loss structures since last year. So currently, right now, I can tell you there's 5,673 policies on the island. 5,549 of them are in AE zones, 90 are in VE zones, and 34 of them are in X zones. We have a we have a building coverage. I think I building coverage. Okay, contents coverage of $350,000. I got my space backwards. Contents and building coverage. So building coverage is over $2 billion right now, which we pay to FEMA as a whole, as a community, for building coverage. Contents coverage is at $350 million as a combined total, so that's including all policies that are just contents coverage and whether they have contents and building coverage. Right now,
So Kelly, where's the rest of them? About 20,000 properties.
yeah, this is how many policies are on the island
So
as a
only
combined total.
5,600 of
Correct.
20,000
Yes,
have insurance.
correct. And so, which seems very minimal, but as a 4x6 island, you have to remember that a lot of these are deltona structures, which don't carry flood insurance because they don't have a federally backed mortgage. We do actually have, I believe, if it's still current, the 10th most policies for a community in Florida. So 5,000 might look minimal, but it's not minimal when you do an overall coverage for a community. Probably doesn't count because they're humongous, but yeah, it puts us in a 10th spot because, I mean, for a 4x6 island, that's a lot of policies.
So
So,
one policy per condo, right?
well, it depends on if this for building coverage would be one condo building. Contents would be a separate, which would be combined with theirs. And so, yeah, so one condo is one policy per building. And then right below, I have the historical claims. You can see that there's been 38 claims applied for prior to Irma, and 33 have been paid out, which is very minimal. And then we get into Irma, which is our most recent, and she wasn't much of a flooding event, but I can tell you out of those 6,000 plus policies, 160 were paid out. That tells me we don't really have a flooding issue, even though we know if it rains, it can flood, but we're doing something right with regard to construction and drainage by having that minimal amount of flooding policies paid out. And so that's just a breakdown. It tells you if it's a pre-firm structure or post-firm structure that was paid out, if it's in a VE zone or an AE zone. So, but then there are a couple of structures that exceeded the 50% threshold and were required to be demoed because they couldn't bring that structure into floodplain compliance. So that's just the historical information that I've started putting together for Marco. It's a draft report right now. I'm having my IT guy double check like zones and stuff, but for the most part, it's pretty accurate with the flood insurance and the policies paid out.
Or reason not to have flood insurance in there.
No, if it rains, it floods. So, realtors are the first line of defense on disclosing the flood insurance information. So we rely, I'm sorry.
Can you just share the screen so that people on Zoom, it's not sharing right now.
Oh,
I don't know if you guys
no,
Go to your,
go to the Zoom meeting,
presentation.
right?
Yeah.
Okay, thank you.
Okay. All right, so yes, as I was saying, that realtors are our first line of defense for floodplain information disclosures. We rely heavily on you guys to disclose this information. If it's not disclosed at the point of sale, they're in my office and I'm the one giving bad news half the time. And so I ask you to make friends with me, provide my information to any future clients. If you don't want to give the bad news, I'll definitely give the bad news. But the way that I look at it is I'm here to help. Chris is, Collier County is here to help. While it might be bad news, it could always end up being something we could correct that you might have not known about in the field that we could help with your sale. I've been told that I have ruined sales for people, but I don't look at it that way. So one of the most important things.
Presentation.
Okay, so
You know,
we could just go. There we go, that works. Oh. Probably did not even.
And then it'll go arrow.
Oh,
Those arrows
okay.
will go to the dance.
You can just, you can advance.
Perfect, thank you. Okay, so this is the Marco Island flood insurance rate map. As it was being described earlier, is that even though it's a flood insurance rate map, they're not going to be using it to rate flood insurance policies anymore. What this map is going to be used for is to determine if you need flood insurance. So whether you're in a flood zone or a low risk area that's not a flood zone. Right now, this is our current flood map. You can see most of the area, or the VE zones are the areas along the coast and the back area by the bay. Most of the island is currently in an AE8, and we use that for construction purposes. And so if you can always go onto the city's website. Oh, it's not, oh, here we go. So we can go onto the city's website and you can enter any address up here. I'm just going to do City Hall. It's called Eagle Drive, Marco Island. And it's going to pull you up right, and it's going to show us what flood zones were located. These are panel numbers, so this is our current flood zone. So City Hall is located in 88. So you can access this on the city's website. If you have any questions, you can always reach out and I can give you the information as well.
We're still gonna do base flood elevation for improvements.
So yes, so that's where the flood insurance rate maps are still used for construction purposes. And so go into here. What is the special flood hazard area? It's the land area covered by flood waters of the base flood is the special flood hazard area on the NFIP maps. And so while the flood insurance isn't going to be utilizing that base flood anymore, we're going to be using it for construction purposes. And so for construction purposes, we utilize that finished floor elevation to determine if your house is floodplain compliant or not. The rule here on Marco Island is minimum of 9 NAVD or base flood elevation plus 1 foot. We have the AE7, which is this area right here, which your minimum is 9. So you really have a BFE plus 2 in that area right there. The rest of the island is base flood elevation plus 1 foot. So whether you're existing structure or a new construction, you have to be minimum 9 or base flood elevation plus 1 foot. If you are not at either of those required elevations, you fall into what FEMA's 50% threshold, which is here. And what, I'll go back to the other slides. So what FEMA's 50% threshold is, if you don't meet those floodplain requirements, you cannot improve your structure more than 50% of its value. Now, that's only the value of the structure, not the deck, the dock, the seawall, the screen, the pool, the property, not just the value of the structure in discussion. And so 2 ways that we obtain that value is from utilizing the tax assessed value plus 20%, because the tax assessed isn't a real market value, or you can obtain a private FEMA appraisal. Private FEMA appraisal usually yields a lot higher threshold than the tax assessed value. We don't argue low taxes, so it's one of those things that you get a private appraisal, it can yield you a lot higher threshold, or you can utilize the tax assessed value plus 20%. So what this is right here is, this is a screenshot of the tax assessed property appraiser. This value at 362 is what they'll have as the improved value, but that value includes every single one of these accessory structures. So you can't utilize that value as the 50% threshold. I have to call property appraisers directly and just get the value of the structure in discussion. So that value, so when I call property appraisers, that value actually comes into 245,000, not 362. The difference is the value of each of these accessory structures. So a lot of times people get sticker shocks because they're like, well, that's not what it says. Well, I understand that. I have to call them directly and get that value. The same homeowner went and got a private appraisal, which yields $590,000. So you can see that that private appraisal yields a lot higher thresholds for their 50% value. Here in Marco, we have a 5-year cumulative. You can't exceed that threshold within 5 years. You can't phase your work. If you choose a private appraisal this year, that's what you have to continue using. If you use the tax assessed value this year, that's what you have to continue using for 5 years. At the 5-year cumulative point, it'll start rolling off and you'll have new cumulatives to start with. So that's really important to remember that this number is not the actual 50% value of the structure. It includes everything that is an accessory structure on the island.
So Kelly, let's, for just friends and giggles, that number is easy. Half of that is what we usually take, but you're taking 245 minus those, and then you're adding another 20%.
So we add 20% only to this number. So what I'm telling you, you can't utilize this number at all. It's not in discussion for the 50% threshold.
Okay,
This
so
is
it's about 60,000 short.
Well, it's different on every structure. How many accessory structures do you have? Do you have a deck, a dock, a seawall? Are you on the water? Are you not on the water? So it's always going to fluctuate. And so this is what we add the 20% to. And so because FEMA knows that a tax assess is not an actual real value, they allow us to add that 20%. And so, but like I said, you can see that the private appraisal is going to yield you a lot higher threshold than if you use the tax assessed value. A lot of people are like, well, we're only doing $15,000. Well, what are you going to do over 5-year cumulative? And it all falls within substantial damage as well. So whether it's damaged by human error or Mother Nature, it all falls within the same category. The way we can determine the 15% threshold if the structure meets the requirement is by an elevation certificate. Yes.
Question, I had a house I was gonna do improvements on, like we're talking about. And the 50% rule doesn't cover my entire project that I would like to do. Would I be able to do part of that project? And then that now adds value to my property. And a year later, go back and have you reassess it so I can get a larger 50% rule to continue on.
You can't phase construction. So if it looks as if you're phasing it, we're going to use the same value. But if you're coming, you do like your kitchen and 2 years later you're coming to do the bathroom, I know you're not phasing the project. But if you're like, I'm doing the kitchen this year, I'm doing the bathroom next year, I'm doing my bedroom, that's phasing the project, and we're going to use the same value for the whole project. And so and it specifically says that in the SISD manual is you can't phase projects. And so
basically I did the kitchen 1 year and then came back a year later and decided to do the bathroom. I'm not going to do the project.
correct, because I don't know that you're phasing the project. Even though you have it budgeted, it's not, to my knowledge, that you're phasing the project. But a lot of times what they do on plans is they'll put future bathroom, and I'm like, don't do that, because then it looks like you're phasing the project and I know about it.
Thank you.
Yes, and so this is the elevation certificate, and Right now, we have David Hyatt, who is with Marco Surveying here in the audience, and for anyone who has elevation certificate questions. He comes knowing how important this elevation certificate is. I'm not promoting his business, but he is a great surveyor who's been on the island for 12 years. And so he's very knowledgeable, and I never have to reject his case. So why this is important is because what this elevation certificate does is it's going to tell me if the house is floodplain compliant. The first thing we look at is, this is the map and panel information from that flood map that I just showed you. So currently this structure is in an AE8, so there's the flood zone and there's the base flood information. We come over here to where it says top and bottom floor, and you have 9.1. This structure has a finished floor that is compliant with floodplain regulations because it's 1 foot above that base flood elevation. Their garage is right here. It's at 7. It's below base flood, below that 9. It's required to have flood vents. So we come over here to the square foot of the garage area, and they have 3 smart vents, which cover 600 square foot area coverage. So this is more than that, so we know that it's floodplain compliance. And then the next important information is, which was being described in the flood insurance mitigation, what they look at is the lowest elevation of your machinery, service, and destruction, whether it's your water heater, generator, or mechanical equipment. Pool equipment from Marco is not looked at, is not referenced in the elevation certificate. And so this tells me that that machinery is compliant because it's 1 foot above that base flood. And so this is a newer elevation certificate, actually a year old. And so then it has information with the smart vent. So this is a brand new elevation certificate that would be great for writing flood insurance because it has our current map information on it, and it has all the current datum and everything that is there. So this is why she was also explaining why it's important to have this elevation certificate when you're doing flood insurance, because another thing that they're looking at is your lowest adjacent and highest adjacent grade to what your finished floor is. Why they might not be using base flood anymore, they are looking at your lowest and adjacent grade. And so it has that information as well. And so that's why it's very important to get an elevation certificate. Whether if it's an old elevation certificate, that is fine. You don't have to go obtain a new one. If you have an old elevation, feel free to send it over to me.
Quick question.
Yes.
On the vents, is that why you're requiring some like properties that are remodeling to put the vents in?
So that is actually up to the owner. So a lot of times what happens is a lot of those structures were constructed and approved with flood vents in them at the time of construction. They get covered up, they get painted over, and they now are non-compliant. So if you have flood vents that you've covered up or painted over, that's now a non-compliant structure, and you have to bring it back into compliance. So you have to fix that, covering them up, and put your flood vents back to its original construction. Or if they were required at the time and you don't want to adhere to that 50% threshold, installing flood vents could bring you out of that 50% threshold, where your finished floor might be fine, your machinery is fine, but you have no flood vents because they weren't required at the time of construction. Well, you either put flood vents in or we do FEMA affidavits. And so a lot of times they'll make the decision because now they're going to get a new EC, they've got a completely compliant for construction purposes house, and then we don't have to do the affidavits in the future. And so that's always up to the homeowner, and depending on how the house was constructed would determine the flood vents.
I got you, why I see why now they're adding them to get that.
Yes, and so because if they don't have flood vents, a lot of times with the flood insurance, they'll rate your garage as the lowest floor. These people would end up being 2 feet below or a foot below the base flood versus a foot above because they don't have flood vents.
Okay.
And so that, yeah, so that's why they'll go ahead and do that. And so, yeah, this is just another example of the elevation certificate and the finished floor. And then here is an example of an elevation certificate where the house is not compliant. So you can see they're located at a base flood elevation of 8, and they have a finished floor of 7.5. They're not 1 foot above that base flood, so they fall within that FEMA's 50% threshold. So that's where the owner decides if they want a private appraisal or if they want to use the tax assessed value. But this finished floor, unless they're elevating it or correcting it, it is a non-compliant, non-floodplain compliant structure. And so when you're selling a house though, and you have an outdated elevation certificate that is not prepared on a 2012 map, you can always reach out to me and I will prepare you a flood information letter, which looks like this. The flood information letter will have our current map information and the conversion from the old datum to the new datum on here. And this letter is accepted by the NFIP as a supporting document to that elevation certificate So you don't have to go get a new elevation certificate, but this will ensure that you're rated correctly with the current datum and the current map information. I get these to you within a few hours upon your request, and so it just saves you time and headache thinking that you have to get a new elevation certificate. And I kind of already went over all this. And I think that's pretty much it for, she covered a lot with the flood insurance, which I'm so thankful that I didn't have to do that. This is not any good information, but as of right now, that's pretty much it. Elevation certificates, if you're selling a house, ask me about the 50% threshold. She'll cover flood insurance.
I have a question for you. If someone were to add the flood vents, does that go towards their improvements?
No, because you're
Okay.
bringing the house into compliance. And so what that means is whatever you're proposing to do at the end of construction, you'll be required to get a new elevation certificate, which confirms that everything was brought into compliance through that section of the EC.
Okay.
And so, and then the other thing is that, so that's construction, but I wanted to touch one more thing on the flood insurance stuff with you is what we just learned also is the city of Marco Island and Collier County as well. We participate in the community rating system program where we go above and beyond what FEMA wants to help the residents receive cheaper flood insurance. Currently, right now, Marco is a class 5. We're going to be going to a class 6 October, and it will be a deduction, flood insurance deduction of 20% off the flood insurance premium. However, because of this new risk rating 2.0 and the rollouts that they're doing, you're not going to get that full CRS credit until you're at your full risk rate. We don't know what the percent is, and we don't know how they're going to be applying that CRS credit to these policies that are just at 18% each year. I just had one of the insurance agents from the island come to me with a flood insurance policy of $11,000 with a $19 CRS discount. That's not a 25% discount, not 20% discount. That might be a 1% discount, even if that. So right now I do have that policy up in FEMA Region 4, asking what's going on as she described that. Not insurance agents. I didn't see what the policies were going to look like. This was all just thrown at us one day and was like, here you go. And so I do have that policy up there showing FEMA what is going on here. Where's the CRS discount and why did this go from $1,500 to $11,000? And so, but yeah, so that's where we are right now with flood insurance and the 50% threshold. And marker. So next up is Chris. He is the floodplain manager for Collier County. And we like to do these presentations together because we know realtors don't just stick to one area, they're all over. And so we don't do everything the same. We enforce the same like federal regulations. However, I have a 5-year cumulative, Collier County does not have a 5-year cumulative. We have a BFE+2, they don't. And so there's different floodplain regulations that they enforce that we do not, and vice versa. However, in the end, we're still going towards the same results, and that's the safety of the residents.
Thank you.
Yay! Oh!
So my name is Chris Mason. I'm the floodplain coordinator manager for Collier County. I've been working in floodplain management and with the National Flood Insurance Program for about 23 years. As of this year, I started on the private side, and only as of about the last 6 years have I worked for the public. Been here in Naples for about 4 years now. I was working up in North Florida in a place called Nassau County and a place called Fernandina Beach, Amelia Island before coming here. Today, while most everyone here, I'm assuming handles property, vast majority of it in Marco Island. Some of you may handle properties outside of the jurisdiction in Collier County, as far as outside of Marco Island and possibly in Collier County. And today I'm going to talk about some floodplain management ordinance changes, which City of, or Marco Island will be going through some as well. These changes are pushed down from FEMA, then therefore through the state floodplain management office. And we have been told that we have to do this, and we want to keep our CRS rating, which Kelly just alluded to. The city is rated as a class 6. Collier County is a class 5 at this time, which we get a 25% discount on flood insurance policies across the board that are actually true flood insurance, not standard X-zone or preferred risk policy. So in order to keep that rating, we had to make some of these changes. And they definitely warrant some explanation, put it that way.
So five is better than 6.
Correct. So the CRS works on a scale from 1 to 10. Really, it's 1 to 9. At a rating of 9, you get a 5% discount, and at a rating of 1, you get a 45% discount. There's only one community in the whole country that's a class 1 that gets that 45% discount, and it's a small town in California called Roseville, California. For example, like Collier County, over 90% of Collier County is in a special flood hazard area. Collier County measures, when you take the water boundaries out of it, measures right about it's 1,998 square miles. Of that, 1,958 square miles are in a special flood hazard area. So over 90%. So it's really an important program to our residents. So the first thing, I know on Marco Island, you guys don't have any type of mobile home parks or manufactured home parks.
We have like 6.
Okay.
Yeah, but
So, and I understand probably most folks here are not dealing with manufactured homes, but this is just something that's coming down. And it's really good for everyone to know. Pre-firm manufactured home, mobile home parks, dating back to the 70s. You guys can read this, I won't read it word for word. The Code of Federal Regulations, when we read it, it talks about replacement of mobile homes in pre-firm mobile home parks, pre-firm being pre-flood insurance rate map. Collier County's first flood insurance rate map was established in 1979. So anything that dated prior to September 14th of 1979 is a pre-firm mobile home park. In order to keep our class rating, we back up. In the Code of Federal Regulations, after let's say I have a mobile home and I'm going to replace it in one of these mobile home parks. A good example of a pre-firm mobile home park is in Goodland. There's a place called the Drop Anchor Mobile Home Park. The Code of Federal Regulations states that they do not have to go to BFE +1, which is in the current building code. And actually, this building code does not regulate mobile homes at the same time. I believe HUD does, but still, we require mobile homes to be at base flood elevation +1. But there is provision in the Code of Federal Regulations that says for pre-firm mobile home parks, they do not have to elevate to base flood elevation +1. They can use 36 inches above grade. So let's say the Drop Anchor Mobile Home Park in Goodland, grade is about 4 feet. The base flood elevation at that location is, I believe, 9. So they only have to go, if it's 4 feet, they only have to go with their finished floor to 7 feet. So they're 2 feet below base flood elevation. That's a provision that is provided for in the Code of Federal Regulations. That's going away. We're basically, the FEMA has told us if we do not want to retrograde in class, and we would go back to a class 9, instead of this class 5, we would only get that 5% discount, instead of that 25% discount, that provision has to be removed. This is kind of a graphic right here. This is over here is your 36 inch here, and here's your base flood elevation +1. We didn't really see a lot of these cases. In my 4 years at Collier County, I've only seen about four people apply for this particular provision, which we grant. We will not be granting it going forward. And we have not changed the ordinance yet, but it will be going in front of the Board of County Commissioners, I would say probably early next year. And this is a good graphic here. This is called the CRS what if statement, and this is germane just to Collier County. Right now, when you're looking at that, it states that we're a class 5, and the total CRS savings in the community is $8.2 million, almost $8.3 million. That's money that stays in the community. And we have over 70,000 policies in Collier County. And the average savings per policy is $111. That's across the board because they do give discounts and standard exons, but they don't give them for preferred risk. However, for the folks that are actually truly in the special flood hazard area, not a grandfather policy of any sort, they're getting $146 of savings. Should we not elect to adopt this or get rid of that 36-inch elevation provision, we'd be looking at this right here. We'd be going back to only $1.7 million. So it's really kind of a no-brainer. Again, we don't see that many of these requests. It's very rare, and it has to actually be an established mobile home park. Say you're in an area that's zoned for mobile homes and you can put a mobile home on that property, but it's not a mobile home park, that rule doesn't apply to. It's only to actual mobile home parks.
That preferred risk policy is going away with the 2.0.
Right, and you'll still get, so a preferred risk policy, somebody can go get a preferred risk policy. I live in a community that's deemed as an X zone just because of letter of map provision based on fill. My lowest adjacent grade is 2 feet above base flood elevation. I have a preferred risk policy. I will still continue to keep this policy, but it's just going to have a different name, I guess, at this point. I don't know what that-
18% increase annually, and the rates.
But is that going to be?
$2,500 neighborhood? I don't know. We'd have to rate it, but they were a lot higher than I thought they would be.
Really?
They're not $500 anymore.
200 or 2,000.
Yeah, over 2K, and I had one that was like 4K, but we ended up getting in the private flood for around 1,800. So
That's really kind of a slap in the face of it for people that are taking preventive measures that are not even in a flood zone. And that's really crappy.
I'm upset. I have to say, I'm upset. Yeah.
FEMA was rewarding people for proactively getting insurance because it's been historically shown that that each year there's a figure that there's a 26% figure, like 26% of flood claims a year now are coming from people that are in X zones. You know, because
And those are maps that are prepared in 1980, which their risk hasn't been increased in.
well, they could even be maps that are produced in 2010, but they're just a snapshot in time. You know, for example, when I say snapshot in time, there's a community up the road here called Fiddler's Creek. I'm looking at it and I noticed on the actual flood insurance rate map, there's an X zone in the middle of a lake. Well, how is there an X zone in the middle of the lake? It's because when they took the aerial photograph and took the elevation data, it was back in 2010, and there was probably a mound of dirt where that lake is now, and that's why it's showing it as an X zone. So this is the ramifications at this point to the savings in the community if we did not adopt this, or rather remove that provision. For folks, this is Marco's probably, I don't know where you guys are on elevation or the permitting requirements for accessory structures, because this is another kind of crazy thing that FEMA's come down and taught and mandated that we have to go through a variance process in some issues or some instances for accessory structures. And you probably have clients that are going to have eventually at some point they'll have an accessory structure or want to put an accessory structure on the building or on the property, and some things are going to change. And it's kind of crazy. For the law, right now in Collier County, we just, you know, if you have a detached accessory structure, if you can put it below base flood elevation, you can put it at base flood elevation, you can put it above base flood elevation. If you put it below base flood elevation, you have to have flood vents. That's just that's the basis. And if it's not base flood elevation +1, we require a declaration of land restriction, which is called a non-conversion agreement. That's a piece of paper that's signed with the it's an application and it's signed and it's filed with the clerk of courts and says you're not going to turn this into living quarters, because if you do, it's a non-compliant structure. And strangely enough, we've seen cases where people will take like a Home Depot shed and convert it.
Yeah, we started enforcing the non-conversion agreement here on the island as well, and it's for those elevated structures that realtors are unfortunately selling as a 5.3 when it's a 3.2. So those elevated structures where they've converted the bottom portions. And when they come into us for a building permit and we have to tell them they have to remove that or they're in violation. And then they're not happy with us because nobody disclosed that it wasn't supposed to be converted. So that's what the non-conversion agreement is going to help with the sale of structures to prevent the illegal enclosures for elevated structures or accessory structures.
So you can't have non-conforming?
Well, that's to,
That's
that's to
to-
prevent it from being non-conforming.
Yeah,
Yeah, but you buy it and it's non-conforming.
No, it's non-conforming and non-compliant are two different things. A
Okay.
preform structure that is currently not at base flood is non-conforming because it was constructed in compliance. Non-compliance is when you take an elevated structure and hideaway and you enclose the bottom and put bathrooms and habitable space in that area below. That's non-compliance. Non-conforming and non-compliant are two separate things.
You break that down again for me, I don't mean to interrupt. you. That exact example, an old Florida home where someone put in a bedroom, bathroom in the open area and closed it, that's non-conforming.
No, it's non-compliant.
Non-compliant.
Yeah, because it's illegal. It was done on Saturday at 9 o'clock because
Exactly.
we
But
never. issued
This
a
will
permit
not allow that to come into compliance, what we're talking about, it's not a correction.
For,
The only correction would be removing it.
Yeah,
right, okay,
so
not
that's
to
why
change
we
that,
do
I
this,
misunderstood.
yeah.
How you just changed that?
Well, we see it from time to time in Collier County where someone comes in and wants to do, they have an elevated home. The bottom area is enclosed below, but we don't know what's down there. We think it's a garage, but it comes through, we get the plans and we find out the permits for renovations in the livable area, what's not considered storage, parking, or access, which is below. And then we find out there's all these bedrooms down there and whatnot, and all that stuff has to be ripped out.
And the estates have been told to sort of that, right, new construction with rentals downstairs.
It's completely possible, you know, like Bayshore area, yeah.
yeah, so you just
Absolutely.
have to, but also you have to remember, we always have to do our due diligence. What year was it constructed? And because there's a couple houses where I'm like, this shouldn't be down here. And at the time of construction, it was compliant. It just was an unusual type of structure. But yeah, if you get those hideaway houses and they have enclosures and habitable space, it's an illegal non-compliant.
Yeah, but can't they get permits?
No, because you can't construct below base flood. Habitable
So
space.
great example is Monroe County, Florida, the Keys. We all know that there's not much housing there. You have service people that need to live there in the Keys to work in restaurants and stuff. So all these people converted these areas below base flood elevation, which were originally reserved for storage, parking, and access. They almost got dropped from the NFIP across the board where nobody could get insurance because they had such a number of them. Somehow or another, they came in and they had all these people rip them out. You know, I don't know how they managed that, but they were almost dropped from the program because of these non-compliant enclosures. So that would mean if they're dropped from the program, if I want to go get flood insurance, I couldn't. Now, 10 years ago, when this was there wasn't a private flood market, I'd be out of luck. So I don't know how, that's a good question too about private flood, is how would they address that? The private, how would they address a non-compliant
Is
enclosure?
there a non?
You know what I mean?
I'm gonna ask that
It's
question.
a good question.
Storage is permitted, correct?
Correct, storage, parking, or access.
So what if their pool table and a bar is stored down there in a manner that they could?
A pool
be
table is
using it?
fine. When you start putting in plumbing, that converts it from storage to,
Because
you
we
know,
end up
having
having to
more
play
space.
this game when we see these things that are enclosed and, we don't want to be the flood police, but it's
Sure.
like.
I'm turning you into the flood police, aren't I?
Private flood does cover the enclosed, that's below, it does, because I had a client in South Carolina, hurricane, big water damage. We had him with FEMA and we had him with the NFIP and they completely denied his claim. And it was a totally elevated 1 full floor. The water was only on the ground floor where the garage was, but it damaged the drywall. And this was a really good example of, well, we have moisture upstairs, it's damp up there now. FEMA said, FEMA didn't pay anything, but a private flood carrier would have. A private flood carrier would have paid the the drywall damage, and, you know, it would have been, it's a much more extensive contract. So,
So
yeah.
FEMA probably didn't cover it because they would consider that a completed enclosure, so because of the drywall.
Yeah.
And by having drywall down there, they consider it completed, and now that's why they wouldn't cover it. If it was just brick, they probably would have covered what was in,
Right.
in my understanding.
Right,
Yeah,
right.
you're the.
Yeah, they don't cover the drive, they don't cover
Yeah.
anything on the ground floor because it's considered, you know, a basement crawl
That's supposed to
space,
be
some
unfinished.
kind of, right, it's an unfinished enclosure.
Air conditioning storage. Right, so,
Well, that's different though, because if you're here on the island, we don't regulate you being able to air condition area below base flood, because if your machinery is above the required elevation, you can put whatever air in there you want. Collier County is a little different with
We
that.
I just went in front of the board yesterday and was accepted, so we are allowing structures to be air conditioned below
Okay.
below the
yeah.
lowest floor or below base flood elevation, as long as the attendant machinery is base flood elevation +1.
Yeah.
We did not, it was specifically not permitted in our flood ordinance that you could not temperature control below base flood elevation. However, FEMA has no area where it dictates that. So we actually went in front of the Board of County Commissioners yesterday and they approved
And you
it.
don't get Sarah's credit for that
You
either.
don't
so-
get any CRS credit. But the thing is that we have the non-conversion
Yeah.
agreement of that area to manage people converting those areas to bedrooms, that type of thing.
Now, I would though, just caution that, you know, there are lots of different private flood markets, so I would definitely, and plus, one trend that I see, you know, I've been in the insurance business for a long time. One trend that I see is that when a lot of claims start getting paid on something, the carriers have a tendency to write an exclusion into the policy to take the coverage away. So, you know, you have to read the contract. If the contracts are going to differ from one carrier to the next. And while at the time of this particular hurricane, that the private flood market that we looked at would have paid it, you know, that may not be the case today, and it's going to vary. So you definitely want to read the contract. I wouldn't assume that all private flood is going to cover that enclosure. But there have historically been some that have.
Is the state getting into the private flood market?
They don't, no.
Okay. Had a discussion on that the other day.
But it is an emerging market, and we are seeing more and more carriers get into it.
Yeah.
So.
It's clearly lucrative
Mhm.
on Marco Island.
Yes.
So back to accessory structures.
That's all.
What we do for accessory structures as of this moment, if you can place it below base flood elevation and you can put flood vents in it, we say, have a good day. You have your evidence of your flood vents, permit, approved. So coming down from the state floodplain management office now, they're gonna get really convoluted. Most communities in the state have been working with a consultant hired by the state to work through this menagerie of really word salad language about accessory buildings. And I don't know why they're making it so difficult, but it dates back to supposedly going back to our Code of Federal Regulations. If you wanted to wet flood proof anything, putting something below base flood elevation with flood vents, you had to have a variance. Communities across the country have been just given permits, Collier County, everybody in Florida said, you got flood vents, you're below base flood elevation, have at it, that is not the case anymore. They're saying now that all along you had to have a variance if you wanted to wet flood proof something. So we came up with a workable model with the state, and we're basically saying now if you have a structure that's below 600 square feet, you do not need a variance. Also, if it's below base flood elevation, we're not even going to require an elevation certificate anymore. That's kind of interesting because the elevation certificate's only there to show that it's compliant with elevation
What
requirements.
about flood vents?
We will require a flood vent report, the product report.
Oh, okay, because the elevation certificate confirms the square foot area in
That's,
the coverage. It's always my excuse to get
So
ABCs. I
they'll
need the flood vent
just,
calculation.
they'll just put it, they'll say, hey, I got 3 flood vents at
Okay.
600,
And that's
200
fine,
square
there's-
feet. So we won't require an elevation certificate. Once you get to 600 square feet to 1200 square feet, we have an administrative variance. if it's elevated, you don't need this variance. If it's below base flood elevation, no elevations required, but you're still gonna require the product documentation, and you're gonna require an administrative variance. An administrative variance is kind of like a fast track variance. It's a piece of paper that says, hey, I understand what I'm doing here, and I will probably be the person that will sign off on it. Once we get to structures larger than 1,200 square feet, it goes to the whole full-blown variance. That means it has to go in front of the hearing examiner, and they have to pay upwards of $3,500 to $4,000 to go through the variance process. And they have to show a hardship.
This is for
This is just
an out structure,
correct.
not anything in Golden Gate Estates. If somebody goes and buys it, and that structure's there, they have to come to a,
No, if the structure is already there, it's past, we're past that point when citing a new structure.
okay.
Which, when we initially thought about this, we thought, well, this is really no big deal because most people will just elevate, because most of these things happen in the estates anyways. That, people will put 4,000 square foot buildings up there, and we're thinking they'll just elevate, or, maybe 2,000 square feet. They'll just elevate, because the base flood elevations out there, we'll say the ground elevation out in some portions of the estates is 12 feet, and the base flood elevation may be 12.5 feet. So then they have a half foot they have to elevate. They'll bring the fill in. They don't want to go through this process. And then we got to thinking, what if somebody wants to build a structure in Isle of Capri? The base flood elevation is 10 and the ground elevation is 5. So they're 5 feet below base flood elevation. And that's really where it started to concern me. That's where we have to go through this process. And it's very unlikely that we would see anybody build something larger than 1,200 square feet in Isle of Capri, but you never know. And here's the crazy thing about it is you can go ahead and build that accessory structure. You could build it below base flood elevation, put flood vents in it, and not go through the variance process. If I just put a second floor on there and put a bathroom and a living quarters, I can totally skirt that process. Just because it would be required to be vented anyways. This is only for accessory structures.
Yeah, on Marco, we don't allow accessory structures like these, and so where it would apply to us is if you have a detached garage. But I'm not sure how a breezeway plays into all of that too, making it a detached versus non-detached. Because it's a separate foundation, and so it's a case-by-case basis, because as soon as you put a breezeway in there for zoning, it's an attached structure. But if it's a separate foundation for floodplain, how are we gonna review it? Detached or not detached? When it has a separate foundation, but a breezeway.
But if I have enough money and I live in Isle of Capri and I want to put in a 1,200 square foot structure, or I want to put in a 1,300 square foot structure, and I have enough money, I'll just put a second floor on it, and I don't have to mess with any of this. I just put the flood vents in, and it's reviewed just like a residential structure. So.
Yeah, so your machinery in there, if you have mechanical equipment that's elevated on a second floor.
It's gonna have to be
Well, yeah, but I
elevated.
mean, in the inside, if you can get a good surveyor, be like, that's my second floor because the machinery is elevated, it's being held up there, electrical. Yes.
And none of this has been adopted yet. It'll probably be, will have to be adopted by, or it'll be adopted early next year. Yeah. And this is basically just everything I just explained. And the last thing is we always plug this. This is how we get our points. We do this thing, it's called Community Rating System 6 Priority Topics. First is know your flood hazard. Large portions of Collier County are in a high-risk flood zone. Obtaining an elevation certificate can help determine your flood risk. Again, this is directly related to the community rating system and how we get points. And Kelly can go up on them for the points and grab this, because we're supposed to relay these 6 priority topics each time we do outreach. Insure your property for your flood hazard, pretty self-explanatory. Build responsibly. That means apply for a building permit. That means protect yourself from flood hazards. Create some plans for hurricane evacuation or a hurricane kit. Protect your property. That means elevating your machinery, such as air conditioners and generators above base flood elevation. And lastly, protect natural floodplain functions. Don't be dumping a bunch of sand in wetland areas. Don't be filling it in. Be smart about it.
Yes.
So, good point about natural floodplain functions. I always like to use this shock factor. Hurricane Harvey, 2017, August of 2017, in Houston, Harris County, Texas. They had 50 inches of rain there over a course of the week. I don't care where you are. Could you imagine if we had 50 inches of rain here, what it would look like? It would be beyond disaster. So they literally had 50 inches of rain in Harris County, Texas. I was reading some articles and doing some research, and over 20, it was from 1996 to 2016, they had allowed over 25,000 acres of wetlands to be filled in Harris County. Harris County is the county that Houston's located in. And during that time, in the unincorporated portion of Harris County, 75 in a 20-year, no, it was from 2007 to 2018, or 2005 to 2017, 75,000 new homes were built in the unincorporated portion of that county. You know, I don't know if anybody's ever been to Houston before, but it's a pretty miserable place. It's just, there's just a lot of development, and it's all built on a bayou basically, and they just filled all of it in. And sure, I mean, having 50 inches of rain really exceeded probably anybody's expectation of what a flood would look like there. You had areas that were in X zones that were non-special flood hazard areas that flooded. So had they only had maybe 20 inches of rain, those wetland areas probably would have absorbed a lot of it, and most of these communities wouldn't have flooded at all. So that's about all I have. So questions?
Andrea,
Yes.
do we have a copy of your presentation?
I can email, I should have your email address from when you're registered. We can distribute it to everyone on the email list, or unless you want to give me your card, and I can send it to you specifically.
Okay.
So unless anyone else, yeah, just if I can get your email address, we'll send it to you specifically.
Nice job, Chris, right there, yeah. Right.
Thank you to Gulf Shore Insurance for providing all the box lunches today. Everybody, thank you for that.
Yay. There we go.
Oh, thank you.
I need a survey.
Oh, it is survey. Open
I
enrollment.
saw that she was here for insurance.
Yeah.
Oh my gosh. Thank you so much.
Okay.
Fell off.
Yes.
It's one of those kind of things that's, you know, you're supposed to know just about insurance, just, you know,
Narrow strip.
it's always a
Rectangle shape.
long email.
Well, I mean.
That guy, he knows everything.
Yeah, but I don't know if she didn't go in. They were just on the point, and showing that.
I guess there's zombies.
You guys are
Liability.
She used it when she sold her house. Nice to meet you.
I don't know what else
Yes.
I have a liar.
The whole idea is
Did he get you out of?
Self-project.